Hello, my name is Mike Florin and I'm with Low Cost Mortgage. Today is your industry update for the week of July 14th, 2023, or the week of, right? Anyways, it's Friday and rates have come down quite a bit this week. But did they really? So what happened is I'm going to show an image here. By the way, we're going to talk about two things this week. One is what happened with rates last week to this week and where is all that roughly sitting. And the second part is how to compare mortgages, right? So first and foremost, right? Last week, first week of July, rates went up a lot. Why was that? Well, the jobs report came out and they were anticipating 250,000 jobs. 500,000 jobs were created. A lot of those part-time jobs. So, that part, it's a wash, right? But regardless, that's why rates went up last week. Well, this week rates come down. Why did they come down? Well, that's because inflation or core inflation is lower than what they were anticipating. So since core inflation is lower, rates are coming down. But if you look at this chart that's right here, and I'm going to put it on the screen, rates are only coming back down to where they were 3 weeks ago. So in all reality, as long as your lenders, or the lenders, like what we did, is you lock with outlets that float down. When the rates went up last week, well, they're coming down this week. Guess what? Everybody's going to float down on their rate. So everybody will, in essence, get the better deal. If the lender, say the scenario or the loan was locked with a lender that does not allow float downs, and we have 3 that don't allow float downs, if we were to lock anybody with those outlets during the time that it was higher, that deal is going to be higher, right? So as lenders, the lenders you work with, as us here, we're always looking at which lender we're going to send them to in relation to where the economy is, what's going on with interest rates right then and there, but also the deal itself. Because somebody with a lot down and high credit on conventional is going to go to a different lender than somebody with medium credit and not a lot down on conventional. They're just going to go to different lenders or different outlets. So that's one. So we're going to look at this image. You've already seen it. It goes up, it comes down, but it comes down to where it was 3 weeks ago. So it's kind of a wash, right? Now, with that being said, let's look at comparing rates. I coach a lot of people on how to compare rates. And I can explain it about 3 or 4 different ways. But the most simplistic way is this, right? You're going to go to lender number 1, whoever you do a pre-qual with. They're going to give you your credit score, and that's all they're going to give you because they're the ones that are going to pull your credit. If you then take your scenario and you call other lenders, they can actually quote you where they are. They don't need to pull your credit. You don't want them to, right? There's no reason that they should have to pull your credit. So you go to lender number 1, they're going to pull your credit. They're going to give you a score, say 740. Now you're going to call another lender and you're going to say, hey, this is what I'm doing. I'm buying a house at 500 grand. I am putting 10% down. My credit score is 740. I need to know 2 things from you, Mr. Lender. What is your interest rate? And what is the cost of that rate? The Block A fees. And the cost is loan origination, loan discount, processing fee, underwriting fee. Everything that's in Block A, it's the top left corner of the loan estimate. But if you do that and you compare not just the rate, but the cost of the rate, you'll end up comparing apples to apples. We tend to beat everybody by a lot when you compare rates the correct way. So if you have somebody and they need that lower rate or they want that much lower rate and they're like an A paper deal or maybe even B plus, give us a call. But more importantly, we don't need to pull their credit just like other lenders don't. But in all reality, your borrowers should be calling 3 or 4 companies. Good thing is they only need to get their credit pulled by company number 1. Everybody else can take their credit score that you give them, the purchase price, the down payment, the loan program, right? The credit score, and they can quote a rate. That's easy. But remember, rate and cost of rate, okay? All right, so anyways, again, Mike Florin with Low Cost Mortgage. Have a great day, and give us a call, shoot us an email. The phone number and emails for us is in the email. But call one of your loan officers, call us, and we'll work through your scenario, and we'll show you how much money we can save you. By the way, right here, save thousands. We do it every day. It's ridiculous how much money we're saving people. So have a great day. Talk to you later.